Let's talk to Richard Hunter. He's from Wilson King. Richard, welcome to the show. Earnings, a good season so far.
Yeah, there's no question that the vast majority of companies on both sides of the pond have exceeded expectations. But in the US, of course, we've got a slightly different situation. There's been something of a trend this quarter for share buybacks. And of course, all things being equal, a share buyback will result in an improvement in the earnings per share metric. You've got the same earnings coming through, but you've got less shares. So therefore, quite simply, mathematically, that number is going to improve. A lot of CEOs are measured on that particular metric, so you can see why it's happening.
Right, but in terms of earnings per share and share buybacks, are the companies, in terms of valuations, is everything so overvalued that they can't see any opportunities for M&A, therefore they're basically taking the easy option?
Traditionally, that could be the case. The other thing, where in the past share buybacks weren't always very well received by the market, is because it showed a lack of imagination by the companies themselves, because they weren't able to invest that money elsewhere. Of course, the slightly different situation at the moment in the US, for example, is with all the political question marks that seem to rear their head on a daily basis until such time as they know roughly where the economy is headed in terms of fiscal reform, let alone anything that does or doesn't happen out of regulation, infrastructure spending. They're not necessarily willing to commit that capital to new projects. So in terms of pleasing their shareholders, easiest route for that money, excess money at the moment, is to put it in a share buyback.
But finally on that, okay, the Dow Jones, another record closing high yesterday. Are the markets discounting all the political tensions that there are and just purely looking at earnings and share buybacks?
Pretty much so, yes, because it would be nigh impossible to keep up with the amount of tweets coming from the president. We've seen yet again another reshuffle within the last day or two. The market is starting to get slightly detached from what's going along on the political front. Even in terms of the initial Trump bump, I think that's now been taken away and replaced by these strong corporate earnings. And it rather does look as though when and if there are actually some market-specific moving events, then the market will react, as opposed to a lot of the noise coming out of the White House per se at the moment.
Richard, thank you very much for your time.